All right. So today we're covering a very important topic. It's a topic that is usually overlooked, but trust me, if you sit through this video, you'll probably grasp one or two concepts that you've probably missed from ICT's catalog, right? So, what exactly are we covering today? What to do when DXY is consolidating? There's basically when the dollar index is being held in a range bound market, or when the dollar index doesn't have a pretty solid bias or direction or anything of great magnitude on the higher time frame, right? And the answer to that is basically right here. You want to focus on what? You want to focus on the exotic or crosses, the exotic pairs or crosses, right? And these are basically pairs that are not affected or will not be affected by the dollar consolidation by forcing them into a consolidation too. Because we have pairs like the euro and Euro USD and GBP USD, the index markets, they're usually very much heavily affected by what happens to the dollar. When the dollar is consolidating, they tend to consolidate too, right? So we want to focus on the non-dollar based pairs. And right here we have the protocol for finding the right pairs or the right crosses. And the first protocol will be to do what? You pair a consolidating currency with a bearish currency. Once you do that, your expectation would be to get what? Your expectation would be to get a bullish pair. And the second protocol would be for you to pair a consolidating currency with a bullish currency. And basically, you would get what? The opposite of protocol one, which would be a bearish currency, a bearish pair rather. And there's another third protocol, which I'm not going to cover today, but ICT covers it. I think it's on his core content teachings and some of his videos. But like I said, this is ideal, right? It's ideal when the dollar index is consolidating. So let me just show you the current price for the dollar. There's the daily chart, as you can see on the bottom right side. The dollar chart of what? The the daily chart of the dollar index rather. You can see how we've been consolidating for more than 10 days now, and we are lacking direction. Seek and destroy profile here, choppy. We try to go up, we fail. Try to go lower, we fail. Try to go up, we fail. We keep on failing. So up until we break outside of this consolidation, then we should not be trading what? We should not be focusing on the dollar-based pairs and what? And the major pairs like Euro USD and the index market. All right. So you can see how we shared our GBPAUD trade or setup or idea in the Discord server right here, and we'll literally get to break down how we got to this exotic pair. So without wasting any time, let's get into the protocol that we used. So right here, you can see the weekly chart of the Australian dollars futures chart, and you can see we're coming from what? There's premium array to this discount array. It's an imbalance to a sell side liquidity pool. So right here you can see the bearish delivery, and on the 4 hour you can see how we tagged that imbalance and attacked this relative equal loss right here. So there's the sell side bias or the bearish bias that we got from the Australian dollars chart. So we've basically satisfied, but we've satisfied the first part of the protocol that requires a bearish currency against what? Consolidating currency. So what did we need to do? We needed to find a consolidating currency from this. But before then, we need to confirm that and the bearishness of AUD by comparing what AUD and NZD, right? So we have AUD, NZD here, and if it's bearish on the daily, you can see bearish delivery being drawn to this low, to this loss, relative equal loss. So we're still confirming what weakness, right, in the Australian dollars currency. So how did we proceed with the consolidation currency? We had what? I said, remember what I said. When the dollar is consolidating, there's a likelihood that these major currencies like Euro and GBP will be held in consolidation too. As you can see, there's a pound currency chart on the daily. You can see how the GBP is literally held in consolidation. The same thing that we saw in that dollar daily time frame chart. We have the consolidation high, consolidation low. You can see we are literally in a range bound market, not going up, not going lower, right? So we have satisfied what? We have satisfied a consolidating currency against what? A bearish currency. And for you to confirm that, you're going to be doing what? Since the expectation would be a bullish pair, for you to confirm that we're going to have the most bullishness in that pair, we need to compare what? GBP and a EU, right? We need to compare Euro and GBP. And right here you can see what? There's weakness, right? There's weakness on this weekly chart on Euro GBP, right? So if Euro GBP is signaling what? Downside delivery, there's literally communicating that Euro is weaker than GBP. But we said GBPAUD, the expectation is that it should be bullish. So you want to buy on strength and sell on weakness. But in this case, since we're bullish, we want to buy on the strongest pair. So we're obviously going to be using what? GBPAUD instead of Euro AUD. But if this chart, listen to this part, if this chart was bullish, then we could be buying on Euro AUD instead. Right, so now that we found our exotic pair, then let's go through the top-down analysis of this particular pair and how we got to our entries and all sorts. So we're going from the weekly time frame all the way to the 5 minutes time frame. So right here, you can see there's the weekly chart. We have a high and a low of a dealing range. There's discount, premium. We're coming from discount to premium of the range, and we said the expectation for GBP AUD would be what? Bullishness or bullish delivery. So right here we're coming from this BC on the weekly, and we have this buy side liquidity pool as our drawn liquidity, and this is how we go to deliver after our day close. As you can see, we tag that buy side liquidity pool. Now let's go to the daily. On the daily, you can see the delivery. There's Monday, Tuesday forming the low of the week. Wednesday, Thursday expands to the drawn liquidity. And right here, you can see how there's a text that buy side liquidity pool. That's the weekly objective. And on the 4 hour, we can see how we had our smart money reversal at that weekly key area. So right here would what we would look for a change in the state of delivery once we close above this up close candles, and we have a breaker right here or a mitigation block, however you might want to categorize it, because there's a breaker on the lower time frames. So we rally higher, come back into this order block right here after we close above it here, and we have it overlapping with what? This fair value gap here, and then we push higher. Now we see what? Down close candle supporting price higher. That is what you need to see on the buy side of the cap. Down close candles should be supporting price to higher prices or higher objectives. So now the right here we have what? The 4 hour terminus right here, 4 hour market maker buy model terminus right here. So you can see how we delivered through to that buy side liquidity pool right there later during the day. And looking at the hourly, okay, before the hourly we have the standard deviation projections. So we are measuring what? The manipulation leg that traded into the weekly point of interest. So we have that high to the low. We mark that out in time between 2 and 2.5. We can see price what? We expect to see price retracing back into discount of the range, right? And the standard deviation 4, because I only use the standard deviations here, I don't use so many of them. So standard deviation 4 would be the maximum expansion expectation. That is the maximum expansion that I'm expecting price to reach out to. I'm not saying that, or we're not suggesting that price cannot trade higher and further than this point, but this will be the ideal area above what our buy side liquidity pool to target, the last area to target, last logical area to target. Now let's go to the hourly. On the hourly, you can see how during London, we opened at midnight right here, trade higher, left behind the fair value gap. We're not trading into this one because we can see how this fair value gap supports price very firmly, right? So as price was trading into this 1 hour BC, we was looking at that and we thought, okay, if it supports price and with a lower time frame confirmation, then we are bound to find executions to attack this buy side liquidity pool. And we wasn't waiting for New York session. Why? Because this market is pretty much close to the terminus right here for it to be consolidating to wait up on New York before it can expand. So you can see how the hourly delivered after respecting this BC. We trade higher, confirm this order block, retest this order block multiple of times, and then we eventually do what? Attack the buy side liquidity pool. Now let's look at the 15-minute time frame. So on the 15-minute time frame, this is the 1 hour BC. We're carrying out those annotations that we used there. So right here, we drop into that 1 hour BC, as you can see, and then we leave behind a 15 minutes order block. We trade higher. Once we retest that order block, that's your first entry, right? We enter here. Where is your stop loss going to be placed? We placed our stop loss on the high of that 1 hour fair value gap. We're trusting price not to retest this 1 hour fair value gap because it has already shown what um strong or strength being so heavy into this market that it doesn't want to disrespect that 1 hour fair value gap, right? So as you can see, stop loss below the main threshold of this order block, and it's on the 1 hour fair value gap high. So the delivery was pretty much sketchy. You get to understand why the delivery was this very much sketchy right here. So we retest this 15 minutes order block a couple of times too, and it's overlapping with what? With this breaker. And you can see our stop was not hit rather. Uh, there's a reason why price consolidated from our entry point all the way to 7 a.m., right? Take note of that very part, 7 a.m. But now going to the time frame that we entered on. So right here we had our first entry. There's the M5 now, the 5 minute time frame. Once we trade into what that 1 hour BC, what did we do? Price started respecting what? Down close candles, right? This down close candle, we close above the opening price, come back into it, propel higher, and then we leave behind the fair value gap. So the first entry was where? The first entry was right here, stop loss below the swing low that retested the 1 hour BC. And you can see prices so hurried up to reach this buy side liquidity pool that it is not even trading below the midnight opening price. So these are some of the factors that made us content to be putting our stop here on that retest of that 1 hour fair value gap. So once we propelled higher, forming this relative equal lows right here, we believed we had so much faith in what this fair value gap holding overlapping with what this down close candle. So it's an order block with what a balanced price range in the form of this fair value gap here, inversion fair value gap. Mark that out in time. It overlaps with this inversion fair value gap. So we trusted what? We trusted price to hold in this area with nested PD arrays, and stop loss would be where? On the swing low on our first, that was formed on our first fair value gap buy, right? So that would be the second entry right here, stop loss right there. And what did we get? This is how the move happened, and eventually we got that push outside of this particular area. And here's what we was annotating: scaling out here, half of the position right here, right? Because it took a long time up and back and forth inside this area. So the very thought was that if it's going to fail to rally to this area before 5 a.m., which is the end of London kill zone, then it is better to scale out because price can easily just reverse and just do whatever it's doing. And on this, at the same time, he was looking at Euro AUD, and it was uh very much stronger than GBP AUD in terms of its delivery to the buy side. We are not invalidating everything that we came uh down to in terms of conclusions during our picking of this pair. I'll get to explain why Euro AUD delivered faster than GBPAUD in a moment. Let me show you something. So right here on Thursday, what do we have? We have 7 a.m. news, right? Look at how many hours GBPAUD was held in consolidation. And at what time did it leave the consolidation? It's not invalidating any structure. It's not taking out any uh, intermediate term laws or anything of that kind. But look at the time, 7 a.m. during what? The news release right here, 7 a.m. We see that push outside of our second entry, 1 is to 3, 1 is to 3. And then we push and attack our buy side liquidity pool. And then we have that tag on that fourth standard deviation area, and then we start retracing lower. So this is showing you what the essence of time, right? Since euro had no news expectation in the morning, right, it was allowed to move, right? It was allowed to move freely during London session, and it delivered to its buy side objective uh, pretty fast than GBPAUD. Even though GBPAUD was the stronger pair, it was held in consolidation, waiting up upon what news release. And in this case, the news release was not used for what manipulation, because we already manipulated into what the 1 hour BC. So once we manipulate into the 1 hour BC, then there's no use for news to manipulate anymore, right? So I've already sent what there's a high resistance liquidity run right here on the swing low. So we shouldn't expect price to be trading below it. But just because of the volatility that comes with news, we are content with leaving our leaving our stop loss right here. As you can see, we retest our breaker and fair value gap one last time, and then we rally exactly at 7 a.m. during what GBP news release right here, as you can see. So this particular candle was the 7 a.m. news release candle. So news were being used to deliver to our buy side liquidity pool. Now let me show you how uh, Euro AUD delivered. So right here, Euro AUD, you can see this clear market maker buy model. So right here we have 2 a.m. retesting the same fair value gap that we saw on GBP AUD, and then 3, 4, 5 a.m. we tag that buy side liquidity pool. So you can see the 2 hours difference between these two current pairs rather delivering, right? So GBP AUD delivered at 7 a.m. due to what the news, and then Euro AUD, even though it was weaker than GBP AUD, was left to move freely, right? It was left to move freely because of what? Because of no news being expected late in the day or late after London session. So you can apply that same ideology to what? Same ideology to when is the dollar most likely to be held in consolidation? When you're expecting news towards the end of the week or later in during the week, probably on Thursday or Friday, then we'll see the dollar likely to consolidate during Monday, Tuesday, or the early phases of the week. So with that being said, I hope you got to see the essence of time and how you should be maneuvering around price and where your focus should be when consolidation is in place or in play, because that is the lowest probability of environments to be trading in. So you want to save your capital for the highest probable market conditions.